so much. Bye.
Thanks, Lisa. You can see my screen still, right? I'm hoping.
Yes, yes, you can. Sorry, I put my
Okay,
thumb up,
great.
but you
Yeah,
probably couldn't
no
see me.
problem. I've minimized all the windows and the chats and all that. So, like I said, if anyone has any questions during it, please feel free to interrupt me. I like to answer them as they kind of come up. So, thank you all for attending the Future of Home Appraisals, UAD 3.6. I'll kind of get into what that is if you aren't familiar with that. My guess is a lot of realtors are probably not familiar with that unless you've been receiving emails from me about it. So, we'll get into that as well as some of the implications for realtors and what I think would be best practices to help along with it. Just a very quick kind of intro to me. Lisa kind of already spoke to what I do and where I am. I'm based out of Bensalem. While I have done thousands of appraisals for mortgage transactions, my primary focus is actually in non-mortgage scenarios, pre-listings. Well, not sure if that was on autoplay or something there, but pre-listings, inherited property, reporting the date of death, valuation as of the date of death for income tax reporting, divorces, assessment appeals, right of way, condemnation. That's my primary focus of my practice, but I still do have a foot kind of in the lending mortgage area. And UAD 3.6 is just a colossal change for the industry. And I don't see a lot of people out there kind of educating realtors about what's coming and it's going to impact you guys. So I felt like this would be important to do. And let's get to it. So I'll get into kind of what the UAD is because many of you probably haven't heard of that or thought about it or know what it is. I'll do a kind of what it is in place now and what's being updated when that's happening, and kind of like I said, what it means for appraisers is kind of really what I'm going to touch on so that you can see how that kind of funnels through and impacts realtors. And then from there, I put together kind of a list of best practices for realtors. Some of it, most of it pertains to what's coming and will be helpful for 3.6. And then the rest is just kind of what I think are great practices to embody and employ in your sales practice. So I'm sure everybody is on the edge of their seat to hear about the history of appraisal report formats. I am not going to subject you to that, unfortunately, even though I'm sure you're all wishing to hear it. I mainly just wanted to have a timeline here to kind of illustrate how infrequent changes come in the appraisal industry when it comes to report formatting. They tend to happen about every 15 or 20 years, and they tend to be a massive overhaul of what is in place prior to them coming in. It's a huge change that's coming now, and it's going to have massive implications for appraisers. So I just kind of wanted to show you the last one kind of happened around the housing crisis right afterward, and we'll get into that and why one is happening now also. So a quick intro to the UAD, the Uniform Appraisal Dataset. I'm going to read it right off here. It's a standardized framework for how appraisers report property characteristics and valuation data for loans going to the GSEs. All of that is really to kind of help the secondary mortgage market who purchase packages of appraisals. They need all of that data from all of the millions of individual appraisals standardized. They need it consistent so that they can streamline it. And ultimately, the whole point of the appraisal is to reduce risk on the collateral. So that was the purpose of the UAD, and it came into practice after the housing crisis, which I'll kind of get into also. This is kind of like you might have seen this if you've ever actually looked through an appraisal report. A lot of them are attached to residential appraisals for mortgage loans. Basically, the UAD, yeah, I mean, it does a lot, but a lot of it is also kind of abbreviations for longer words in specific sections of an appraisal. And the idea is to just kind of make sure appraisers are saying the same things in the same places. It's also post 2011 or around the housing crisis, we had the introduction of condition and quality of construction ratings. Also, this came from the UAD. I'm not going to get into these individually. I do a presentation just on that. Also, I did one recently for Honest Real Estate a couple months back. It takes about 45, 50 minutes just to kind of run through how appraisers think about the different quality and construction ratings. I just wanted to illustrate it. This was a good thing that the UAD brought in, was kind of standards around how appraisers talk about the quality of a building, the condition of a building, or improvements rather in the site, because these are very subjective components of property. So the more we can kind of standardize them as best we can, it becomes easier to review them and then subsequently package them and sell them secondary mortgage market. So all that said, why is UAD 3.6 happening? We are kind of at that timeline where it's been about 15 or so years and we needed an overhaul. The last one came after the housing crisis and was really a response to that. It was to standardize all of the information so they could look at it at scale and really to identify risk more easily, because we didn't do that well at the housing crisis and we had a huge mortgage meltdown as a result. What came in response to that, the UAD, the present version, it was an improvement, but technology moves fast. So what was great then, or good enough then, or better then, which was some static forms, we had some standardization, but the forms are static. There is limited space for appraisers to say what they need to say in reports. There's kind of a running joke among appraisers that everything we do in our report says see addendum, because we don't have enough room anywhere to say the things we need to say. So we say see addendum, and you can go find our addendum in the report, where we'll have multiple paragraphs, sometimes explaining certain things. The issue with that is every appraiser puts their addendum in a different place. Every appraiser's addendum is laid out differently. So for reviewers looking at appraisal reports, they go to see the appraiser's addendum and it looks different than the last 11 that they looked at, and all the other 11 look different. So it really kind of started to become more of an issue from a review standpoint. There's just the inconsistent placement of things in the report, the dislocation of the information. That leads to longer reviews, that leads to delayed transactions. All of that, there are things technology can now enable us to improve upon. So, and there's a demand for it. So everybody wants everything faster. And we now have much more demand for what are called alternative valuation products. And I'm going to get into that in a second. But the idea is the main version of an appraisal that we all kind of know, where the appraiser comes out, walks through the inside of the property, walks the outside of the property, puts together a full comprehensive report. That is starting to become less and less common and less in demand. So here's what I kind of call the valuation ladder. This is what we're going to start to see more borrowers going through, and it's already happening now, and I'll kind of talk to the prevalence of it. But the idea is the initial stage of when a borrower is buying a property and the lender wants to understand their risk on it and they need to understand the value of the property. They're going to run a first level automated valuation model, or AUS. I can't remember the full acronym. I think it's automated underwriting system that goes through that, which incorporates an automated valuation model, kind of like Zillow would implement. But a lot of them have their own proprietary ones or third-party ones. And the idea is if the borrower's credit profile is strong enough and the AVM supports a value at a point that is around the contract price, and I'm not a loan officer or in the mortgage industry, so I can't speak to exactly how this is done, but the general idea is they've determined, based on those factors, they don't need an appraisal. So they're going to get a waiver. And they accept the value as the AVM reports it. The borrower's credit is strong enough. We can move on past this part of the process. From there, if they go through that and they realize, okay, we have an AVM, the borrower's credit profile is pretty strong, but there's some information about the property we're a little bit unsure of. Let's have someone go out and look at this. And what these people will be called are property data collectors. Some realtors may be doing this. You've maybe been approached or been told about this as an opportunity to supplement your income. I expect that would be something realtors may be doing more of in the future. This is where you go out to the property, you gather all the information about the subject, you're taking photos of the property, pretty much the first half of what an appraisal accomplishes, which is gathering everything about the subject. Now in the second stage, there's no appraisal report. They've got their AVM, they have someone going out to see the property who's likely not an appraiser, just to verify that the property is there, is not, burnt down, isn't falling apart, is consistent with what they expect in the AVM. They still don't need an appraisal, or decide they don't need an appraisal and move on. The next rung up the ladder is the hybrid appraisal, where either the borrower's profile dictates this or the ABM doesn't have enough data that they feel comfortable with. So they'll have, again, somebody go to the property who's likely not an appraiser, gather all the information about the subject, and then hand that off to an appraiser who finishes the back half analysis. And you're wondering, why not just send the appraiser? Why all this disjointed stuff? Cost. The appraiser costs more money to go to the property to do this versus someone who would go out at a lower cost and be able to knock out, maybe a dozen or 50 or 100 of these in a week or so. The point is I don't think it expedites time, but it can still reduce the cost a bit because they have a cheaper aspect going in up front, and then the appraiser is not going to require the full fee that they normally would because they're not the one going to the property.
David, we have a question
Yep, go ahead.
from Michael Arleth. Does the buyer still pay a full appraisal fee for the AU process, or is there a scaled down pricing?
A great question, and I'm not sure at all. I would think that they would. There is a couple aspects to this. First, the appraiser does not get the full fee that gets paid by the buyer. There is an intermediary in between mortgage companies or lenders rather and appraisers called appraisal management companies. They are typically engaged by the lenders and take a cut to find appraisers. The appraiser gets a reduced fee, and the cost of the person going to see the property versus appraiser going is lower. So all of that in theory should be a lower cost for the buyer. Whether or not that's made transparent or how to verify that, I really can't speak to. I'm not sure. It's a good question to ask your loan officer, saying like, hey, we got a waiver, or hey, I see this isn't going to be a full traditional appraisal. What's the cost? And if it's, $200 instead of what you're accustomed to seeing, $500-$600, you're getting savings there for the buyer. Great question. Was there another one, Lisa, or?
No, that was it for now.
Okay.
Thanks.
The fourth rung of this is the desktop appraisal. So again, I don't know all of the full criteria here because I'm not on that side of it, but the credit or the borrower's profile, ABM, maybe there's limited comps, something like that. Now they want a desktop appraisal. This is where no one goes to the property. Maybe no one can go to the property because the borrower doesn't want them in, or the seller doesn't want them in, or it's a hard to access property, or it's rural or something like that. They may order a desktop appraisal. This is where the appraiser performs the valuation without ever going to the property. It's a very common valuation practice by appraisers. I've done many of them, not necessarily for mortgage situations, but we have enough information mostly online. And now we have tools also where I can enable homeowners to walk through the home and provide photos to me. I do this with realtors a lot for pre-listings. You guys already put everything on the MLS anyway, or you're going to walk through and get your photos. If you send that to me, we talk about it. I generally have enough to do a desktop appraisal. So this is a common thing coming up in mortgage lending also, where that I would expect there to be a lower cost to the buyer also because there's no site visit from the appraisal. So it's less time from them. As my own personal preference, there is a lot of pushback in the appraisal industry against hybrids because appraisers do not like unlicensed and non-appraiser trained people going to properties giving them information about the property. We would much rather have a trainee that we've trained go or someone from our office go to get us that information because the information we get is disjointed and dislocated and done differently from all different people. So the desktop is much more preferred from the appraiser perspective, in my opinion, because it's just us from the start and we can do it without an inspection. Sometimes no inspection is even better than having an inspection where we have to re-clarify everything that they didn't capture while they were there because they weren't properly trained. The final rung of the ladder would be what we're all accustomed to is a full interior exterior appraisal. Generally, that's going to come where either it's a borrower concerned with not necessarily a concern, they're just not as much of an easier pass through from the risk perspective, or the property's complex, there's very limited sales, it's a atypical market, that kind of thing will dictate still an appraiser coming out. And I don't know if my Zoom bar is covering the bottom here, but My rule of thumb that may or may not be covered is the top of the ladder, the waiver, the value acceptance, the hybrids, those should be lower cost and because they're more expedited and should be quicker. The bottom would be for a higher degree of certainty in unknown situations and would expect to take a little bit longer, cost a little bit more, or more consistent with what we're expecting these days. So Ed Pinto from the AEI Housing Center puts out great data on this. This is the prevalence of appraisal waivers. This is every October for the past 13 years or so. You can see there was a massive spike in lenders being open to and utilizing appraisal waivers during that time. Part of the issue was there was incredible demand. There was no inventory. There weren't enough appraisers to meet the demand of everything that was going on. At least that was the narrative of what was being told. So more and more waivers were granted and given. Prices were appreciating, capital was cheap, there was a lot of equity in the market. Not surprising to see that kind of around that time. What is maybe a little bit surprising was it kind of came down and normalized, but it's going back up again. So these things are here to stay. They are increasing as our market starts to kind of unclench a bit. We're starting to get more listings, more inventory, more sales are happening. It is moving glacially slow, but it is moving in that direction. And these products and these waivers are going with it. So I expect them to stay. I expect there to be, you can see here in my note that they opened it up to eligibility open to loans with 80 to 90% loan to value. I'm guessing that was probably down by 70% prior to that, meaning if the borrower was putting 30% down, the likelihood of them being granted a waiver was much higher. Whereas now it's getting more closer to where we commonly see more down payments happen. So waivers are granted using a database analysis of the reasonableness of the applicant's self-valuation. I thought that was an interesting thing to include. So the borrower provides their own estimation of what they think it's worth. They run that against the AVM, and then how reasonable is that is kind of the basis or one of the basis for determining whether or not a waiver is granted. So these are, I want to kind of demonstrate what is before we kind of talk about what will be. So these are two appraisal forms that we have currently. The left is the Uniform Residential Appraisal Report. This is for all single family homes, whether they're detached, twin, anything like that, but single unit. On the right is the form for condos with an interior inspection. Appraisers have about 5 other forms. So we have one for whether or not we went inside a single family property, if we only saw the outside of a single family property, if we went inside a condominium, if we only went on the outside of a condominium, if we saw a 2 to 4 unit building. So many forms, and if you can tell, I mean, without even really looking at these, they almost look identical. There is a ton of redundancy across the forms. So it just doesn't make a lot of sense to have all of these different forms. And that's one of the things UAD is going to address. They're going to have, and one other thing I wanted to touch on, there's a lot of check boxes here. When we check those as appraisers, nothing happens. It's a yes or a no, really. And then we have little fields here and there where we can kind of expand on our comments related to, for instance, there's one about site, or highest and best use is a great example. Highest and best use lets us fit about 15 words. That sometimes requires multiple paragraphs to determine and explain the highest and best use of the property. Whereas now we're kind of limited, we would say see addenda in our new forms, and the industry has gone to great lengths to say these are not forms. It walks like a form, it looks like a form, it's totally a form. But what's better and different about it is they are dynamic and all-inclusive. So all-inclusive meaning whether the property is single family, condo, we're going in the property, we're only doing the outside, it's a hybrid appraisal, it's a desktop appraisal, it's a full traditional appraisal, it's all going to be done on this form. So there's going to be a ton more uniformity, a lot more standardized, and the boxes that we check off are dynamic, meaning when we check off a box, only the other relevant fields in our reports show, display. So if I check off that the property is a 2 to 4 unit, or let's say I check off that it's a single family property, all of the questions that we would normally address or answer or in a whole nother form that pertain to 2 to 4 units won't even display. So it's very dynamic. It's very helpful for appraisers in that sense. And this is kind of what I was alluding to. There will be things that always display that everybody needs to see every time. There'll be conditional displays, which I kind of touched on. Whether or not they pertain to that actual property and the intended use. They may or may not display. There's repeating displays. So if we are doing like a property with an in-law suite, we'll have all of the information we have to answer about the main dwelling, and then also the repeating displays for the in-law suite or the accessory dwelling unit. All of that is very good for readers of appraisals. I know realtors don't always read appraisals. A lot of times it's, what was the value and move on. Of course, unless the appraised value doesn't meet the contract price, and then you're going to go through that report with fine tooth and comb. But when that happens, they will be much, much easier to read. We have much clearer sections, I think, in the forms coming. There's also way more room and can't think of the right word, but we'll have more room to write the things we need. We can attach exhibits in the places where they actually pertain. So sometimes we would describe the site, the property site, and then we would have to say, see addendum, so that we could expand on what we said. And then we would say, see attached photos, so you can see the photos of that thing. Now it'll all be in the same location. Hey, here's this site component. Here's what we think about it, or what the market has to say about it. Here's a photo of it. It'll all be much more cohesive and together and easier to read. With that comes a huge additional burden on the appraisers for increased granularity in our reporting. And I'll use condition and quality of construction as an example. Prior to the most current version, or prior to the current version of the UAD, we would address things like condition and say words like poor or average or good or new. These are obviously very subjective. So the GSEs wanted to have kind of a more standardized way to think about those things. So they developed the ratings, the C1 through C6 ratings for condition, the Q1 through Q6 ratings for quality of construction. Again, I kind of touched on them a little. That's a presentation for another day, but the idea is when an appraiser sees a property, and another appraiser sees that same property, we should be rating them the same. We should both be saying C2 or C3. That doesn't always happen at all, but there is some structure or standardization there. What's being further improved upon or expected from us to kind of expand on is now we'll be doing condition and quality ratings of the interior, condition and quality ratings of the exterior, and then an overall condition and quality rating of the whole property. Now, we kind of do that already. We really do that already. We look at the property holistically. We take it all into consideration and kind of form a final rating. But the new UAD is going to be a lot of show your work for appraisers. So it's going to be, okay, what was the exterior condition? Why did you rate it that? What was the interior condition? Why did you rate it that? What's the overall rating? How did you balance those to kind of come to that conclusion? That's neither here nor there. I'm only using this to illustrate that this is one area of about 200 that appraisers are kind of being asked to expand on. So the scope of our work is increasing dramatically. The detail we're putting in our reports will increase dramatically. The data being captured is increasing dramatically. Whether or not realtors read those reports, I don't know that that'll change, but when you do, I think it'll be easier to. I think finding the information and a lot of the questions realtors have, especially around things like repairs that come up a lot, those are a tough thing to find in appraisal reports sometimes. Appraisers put those everywhere. There's not a structured space for them. There's not enough room for us to kind of describe them. So one of the best features I think coming out is a summary page, which will have all of the main important information everybody needs to see in the appraisal. One of those being, I don't know if you can read it down there, but it says apparent defects, damages, and deficiencies requiring action. It'll be right there on the summary page. If anything needs to be addressed, you won't have to go digging through a report to find it. So there are some really good things coming from this, and I think I'm probably a little bit biased as an appraiser because of the expanded scope of work that's coming and additional reporting requirements. But for those reviewing appraisals, for those relying on appraisals, this is going to streamline a lot, and it's going to make many things easier for those people. And the basic concept of all of this is kind of like the TurboTax solution. So we have all these kinds of forms. I listed out a few there. That's an interior only. That's a manufactured form, an exterior only form, a condo inside, a condo outside, a 2 to 4 unit. The idea is bringing that all to one dynamic form that adapts to the use and the property as we go through it. As far as timeline, we are in between the limited and broad production stage. I believe the very first UAD 3.6 appraisal was just completed. It was like the beginning of December, the end of November. And I've heard a few other appraisers post online of having done them as well. I haven't done one yet, so I can't speak to that personally, but broad production starts end of January. So I expect more and more of appraisals will be done in this new format. The mandate is by the beginning of November of this year. That is a hard stop. There will be no more of the current version of appraisals. They will all be going 3.6 from there on.
David, there's a question.
Yep.
It was from 2 minutes ago, so it's from Sherry Pace. And Sherry, you might have to, I'm not sure if it's out of context now, but so if work and data will increase, I'm assuming so will cost.
I would think so. I would expect, and I'm going to touch on that a bit, that appraisers, when it gets to the point of being a full traditional appraiser, I'm raising my fee. It's going to be about an additional 25 to 30% of scope requirements. So yeah, again, that earlier stage of the valuation ladder where things are being waived is increasing, but when it does get to an appraiser having to come out, the requirements are going up. The time is going to take longer, and I would expect appraisers to bill more. I'm going to kind of, in a few slides, talk about some other things I think appraisers are going to be doing as well.
Here's
But good question.
here's
Yeah.
another question. If you want to, I don't know if you can open up the chat, but it's from Scott, and I'm not sure
Okay.
if you can answer this, but it's what do you expect to increase your fee to for an appraisal on a typical 2,000 square foot detached home on under 1 acre based on these expanded scope of work and time requirements?
Super specific question, Scott. I love it. I won't give you a specific figure. What I will say, if I anticipate the scope is going up 25%, I'm raising my fee 25% at least to meet that. It'll be a case by case basis for every individual appraiser. But I think the amount of time additional time that has to be put in should be met and commensurate with what you currently bill hourly, probably. So that's how I think about it. But great question. So I kind of touched on a lot of this, and so the mandate is in November, and then it'll officially retire the old forms in May of 27. I switched back to this because I think retirement is an apt word for what's coming for appraisers. I think with the rollout of this 3.6, we are going to see a massive wave of retirement from appraisers. I think the average age is around 60. I hear it published differently from different sources. Sometimes it's 55, sometimes it's 62. All of it is near retirement. And this is a big change. And change is scary at the end of people's careers. So as this kind of happens over the next year or two, for the people who don't want to adapt, I think retirement is going to become a more attractive option. I personally expect a minimum of 10% of active residential licensed appraisers to retire or transition to other service areas. I kind of already spoke to that. I address other valuation scenarios outside of the mortgage industry. I do a lot with right of way, a lot of divorce, inherited property situations. They don't need to be done on UAD 3.6. 3.6 is only relevant to the mortgage industry. So I expect a lot of appraisers to be looking elsewhere or selling their services elsewhere, because there is also a ton of consolidation in the valuation industry right now. Appraisal management companies, which are those intermediaries between lenders and appraisers, are gobbling each other up. they are hiring staff appraisers for themselves, and they are taking a bulk of the volume for single shop appraisal firms. These, I put on there kind of the death of the solo residential appraiser firm. I think that's probably likely in the next 10 years or so, if that long. These were kind of prolific for the past 20, 30, 40 years, where it's, one guy in his office doing a ton of appraisals. Maybe he trains his kid and then that kid takes over and it's just him for the next 15 years. That's going away. These people are not going to be able to compete with AMCs. They're not going to be able to do it at the scale or pace to make a living reasonably. That's why I think there'll be more retirements and transition to other service areas.
Here's
This is all
another
about,
question.
oh yeah,
Sorry.
please,
Sorry.
you're good.
Have you heard anything from the appraisal software companies as to when they will have 3.6 up and running?
So somebody did one already, and I think it was Freedom. Freedom was the platform provider. As far as I know, Olive Mode, which is the biggest, is maybe almost there or not quite there just yet. I know they have like a beta version that can mostly do all of it. So that's part of this whole thing too, with delays and the people that develop the forms for appraisers to report their appraisals on are still getting up to speed and figuring things out. And then once the broad production happens, we kind of get a mass opportunity to test it all in the systems and make revisions there. And that leads to delays, and then you get the first round of reviews of all. So there's going to be some friction when this kind of unfolds. I expect as broad production goes up, there'll be friction, and at the hard cutoff mandate, there'll be a lot of friction. So the original question, the only one I know so far is Freedom that I've heard personally. I suspect there are others because I've heard other appraisers that have completed 3.6 reports, and I'm sure they're not all on Freedom. I don't know specifically any of the other ones that are ready yet. I put mobile capabilities in question mark because all of those technology providers were just bombarding appraisers with, you have to be mobile for 3.6. You need to get on the iPad. You're going to be left behind. You're never going to be able to do this. And I've been mobile for 5+ years. How appraisers still work in the field with a clipboard and a pencil at this day and age is beyond me. But the very first 3.6 UAD appraisal was completed by a guy with a clipboard and a pencil. He did not use his iPad. So, the appraisal industry can be very difficult to adapt and evolve. And I guess like what I say is, when there are people out there still, they see all this change and they're still going to do it on a clipboard, that person probably has a solo firm, and that firm is not going to be around much longer, unfortunately. If they're not even willing to adapt to use an iPad in the field in 2026, it's not going to last much longer.
Here's another question.
Yeah.
And if it gets to be too much, we can wait till the end. Just let me know.
No, you're good.
For appraisal report waivers, is there still at least a letter provided to the buyers at closing, placing an automated value on the property, or only if an appraisal report is required? And additionally, can a buyer request to have a full-on appraisal performed with site visit if they choose?
The first part of that question I can't speak to because that would be outside of what I do. I don't know if they would get a waiver stating what the valuation from the AVM would be or not. The latter part of that question, you're welcome to hire your own appraiser. You do not have to do that through the mortgage company at all. In fact, I would advise that, because then you are the appraiser's client. We get to engage with you directly. We can go through the whole report with you. Unlike in mortgage scenarios where you're paying for the appraisal, but really the borrower is reimbursing the mortgage company, and the mortgage company is the appraiser's client, and they have the client privilege, and we cannot discuss the appraisal with the borrower at all. So if there's a situation, and I do kind of get to this later on, where a waiver is granted and the borrower wants to just really understand where they are objectively, or maybe they're like near a PMI threshold, or they're planning a renovation right after they buy, those are great situations to reach out to an independent appraiser like me or another one in the area, and have an appraisal done. It may not even be the cost of a traditional appraisal. We could do it as a desktop. There's a lot of flexibility if you engage the appraiser independently. So great question. I'll kind of jump to the next slide here. Was there another question? I saw a couple chat bubbles pop up.
No, that
No.
was the last one.
Okay. All of that kind of flows over to realtors now. So, and we did touch on a lot of this already, but they're going to be traditional appraisals they're still going to be required. But again, transaction volume is still near all-time lows. Like as we get to a more balanced market eventually, we will have more appraisals required. Many of them will still require traditional appraisers. It just won't be as high of a percentage as it used to be, and it won't be the given default. They'll likely cost more. Appraisers will spend much more time at the properties. So, you know, if you're going to tell your seller to go walk the dog while the appraiser's there, you might want to let them know they really need closer to an hour, probably now. Expect much more phone calls, many more phone calls and texts from appraisers trying to verify data about your sales, your past sales. Because we're going to need to be fulfilling many new data requirements for the comparable sales. You should already be getting calls and texts from appraisers verifying things, but this is going to go up by a lot. The best way to help that is increasing the accuracy and the detail on your listings. The more information you can put in there is amazing gold for appraisers and very helpful. Even if you do, I know there's like homeowners now who don't even want their photos on there. So if you don't include them, but you keep them, that's something that's helpful to. I've had called agents and they've kept them on file, and we're happy to they confirmed with the homeowner and shared with me. So even though they weren't online, I was able to verify what was needed for the appraisal I was doing. I expect more of that. And like I said, transaction delays are probably an inevitability at some point, at least initially. I do think once all the wrinkles are kind of worked out, things will streamline much more smoother. But I think it's going to take a while for that to happen. This is only for residential home appraisals. This has nothing to do with commercial appraisals. UAD is only about the residential home appraisal. I kind of touched on all of this already, and just for the sake of time, I'm just going to kind of go a little bit faster through what I think are some of the best practices to help with UAD and also just in general. Providing a floor plan. This is super, super helpful. I know that every brokerage has kind of a different policy on this, but as far as I understand, in early 25, there was a ruling that these can be provided. I know some brokerages wanted a third party to do it. Appraisers can do it. I forget, I think it was Adam. I forget his name at the beginning. Photographers can do this. Floor plan should be with all listings. It's 2026. This is just something that is so helpful for appraisers too, but it's also helpful for prospective buyers. They get to see the flow of the property. Where are all the rooms? How's it laid out? Many of these can be done for free. Cuba Casa lets you do this for free. You don't have to show the square footage if that's your concern, or the dimensions. It'll literally just give you the layout of the room. That might save you 10 calls from appraisers just having that alone. So highly recommend that. Putting together an improvement list. If you're asking your sellers to do this, give it to the appraiser. You know, I know you kind of do this in the seller's disclosures, but and we read through those also, so it's helpful when they're filled out with anything at all. I know sometimes they're blank, but if they also put together an improvements list, that's a best practice, I think. And ideally, if you've got when things are done, is very helpful, because we'll walk through homes and, you know, the windows are new 2025, new 2008. Okay, the windows are not new anymore. Cost and, you know, who did it? Was it Uncle Bill did it, or did they have a professional company come in and replace the windows? All of that's very helpful and informative for appraisers that need to verify sales. Sending sales considered. Some agents do this. I recommend everybody do it. You don't have to show up at the property and meet us there if you don't want to, but it takes 2 minutes to just email us a link to the sales you use to price your property. And it's specifically important for 3.6 because appraisers will have now a specific field in there that says, excuse me, there'll be a field that says sales we considered but didn't use, and use meaning in our like sales grid analysis. So that should address many of the reconsiderations of values we also have too, because we're going to say, hey, here's where the 5 sales that kind of we looked at and came to a conclusion on, we also considered these other 6 sales. So there's not going to be a lot of like, why didn't you use this sale? We did. It's right here. It's in this section. We just didn't use it. So, or more importantly, if you send us the sales you've considered, we get to see how you thought about pricing. And a lot of times I'll follow up and say, hey, this wasn't a sale I was originally thinking was comparable. Can you tell me about why you thought it was? And that can reveal things. And a lot of times I'll end up incorporating a sale, and whether I weighted or how I weighted is different, but highly recommend sending sales to the appraiser if you've done a CMA, and don't just send us the highest sales possible. That's a waste of our time. We'll know immediately if you've done that. So just, you've done the work, most likely if you're a professional, share it with us because it streamlines the process and it gives us an insight into how you're thinking. Sometimes you guys are privy to off-market knowledge that we don't know about. We don't always, capture FSBO stuff unless we happen to see it driving by, or if it's not published anywhere. Sometimes you or your seller know the neighbor sold privately. If you can connect us with someone from that transaction, that's helpful. It's informative. We can rely on that sort of thing. And you guys are more clued into that than appraisers are a lot of the time. So highly recommend, if you've got information, share it. Because like I said, this is all about data going forward for appraisers. This is probably my most popular recommendation for listing agents. Everybody's eyes kind of light up when I say this. When you have a listing and you get multiple offers above asking price, and you're putting together your sheet for your seller with each offer and the terms and the contingencies, give that to the appraiser. That is gold, because we can then show, hey, here is proven real demand for the property. Yes, it was listed for X. Yes, it's under contract at Y, but there were 4 offers clustered around that price point at Y. So even if we have few sales or just sales from a while ago, and we're trying to account for how the market changed since then, here's 6 real offers at near the price point that we can demonstrate and say, I did this a lot around 21, 22, where buyers were insane and just everything had an escalation clause, and there was 14 offers in 24 hours. And, it's like, how do you support this kind of value when you don't have the comps to prove it? Well, I have 12 proven offers here, legitimate ones. I have listings all selling 10% over asking. They're all selling in 2 days. All of that can inform and help support a value opinion that's above the listing and contract price if it's warranted. It's just one of those things that's very helpful, and I highly recommend. Responding to our calls and texts, you'd be surprised how many agents just don't answer. I'm not sure how any of them get business done, but there are many times I call and text and it's just silence, and I'll call a few times too. It's just so helpful. You guys are the only ones sometimes that we can talk to in the transaction who know what happened. So highly recommend, even if it's just respond, yes, that is true. A lot of times I'll text and I'm laying it all out so that all you need to say is yes or no, that is true. So that is just super, super helpful, because we have requirements under USPAP to verify every transaction. We kind of touched on this also because someone had the foresight to have the question of appraisal waivers. Highly recommend, if you get a waiver, I think the initial response is celebrate. We don't need to pay the appraisal fee. Let's move on. We have a strong borrower. This is great. The appraisal waiver is not a reflection that the offered price is market value. So if you're fine with that, great. If you're concerned about that and you just, your client had to have the property, but there are situations where they also want to know where they stand, or get a real sense of when they're going to cross that PMI threshold, or we're going to do this work afterward, a private appraisal after the waiver can be helpful. It's mainly just about educating. It's like, hey, you got a waiver. This is great. Keep this in mind. Here are some other options if you're concerned about that. Getting help with pricing. This is kind of a shameless plug for me. Basically, I do a lot of pre-listing work, and stale listings. So if you've had stuff on the market for a while, it can be helpful to bring an appraiser in and just kind of give you a sense of what's going on, maybe why you're not getting offers at the price point you're at, how long you should be at the price point you're at is informative too. appropriately priced listings is just something that I think everybody wins. So that doesn't really tie into UAD 3.6. This was kind of from another presentation and a shameless plug for myself. So I won't spend too much time on that. But the ROV process is also something that I recommend everyone be updating their clients about because I believe there is now, and I can't speak to this fully, but I think there's a form or there's a process of a form being done where borrowers are made aware of this at the beginning of the process, letting them know that if the appraised value is below the contract price, they have options, right? They can challenge that appraisal. How they challenge that is a formal process through the mortgage company, and they will need to provide information that they felt the appraiser overlooked. Again, this will become, I think, less common going forward as the UAD forms will capture things we considered but didn't include in the analysis. Everything's kind of more organized and it'll be clear what we did and didn't consider, where we considered it, how we considered it. But the RV, the reconsideration of value option is there. It's a good thing to let borrowers know about and sellers know about. So just keeping your clients educated on that. I'm actually going to do a newsletter piece on this soon, so I'll have more to share about that. And then collaboration, again, kind of a little shameless plug here, but talk to appraisers more. There are so many scenarios in which realtors and appraisers can help one another that aren't immediately obvious until we start talking to each other. I learned so much from realtors. I do a lot of newsletter content with them. Anytime they have a unique situation, like we just did one on property insurance, I was not aware that property insurance was becoming a real issue, especially with roofs, and it's kind of derailing and delaying a lot of deals. So we put together a newsletter piece on that, and all of that is just so we can inform our clientele, make them aware that we're the experts in the market, we're the trusted experts to turn to. So I think appraisers have a tendency to not want to talk to realtors, but the more you engage with them outside of the mortgage process, I think there's a lot to be learned on both sides and just value to be provided everywhere. So that's all I've got. I tried to keep it close to I kind of sped up a little bit at the end because I was worried about time, but I'm happy to answer if there's any other questions. The top QR code is my newsletter. I put out monthly updates on the Bucks County housing market. I just did one this morning. And then also kind of other property related stories. The bottom QR code is my contact information. So if you want to get a hold of me, call, text, email. I'm active on LinkedIn. I love going to take realtors to coffee. I also do presentations all over Bucks County. So please reach out.
Yeah, thank you so much, David. This was really informative. As a reminder, has been recorded and it will be on our website, and you will also all receive a copy. We do not give copies of the presenter slides. If you're interested, you can contact the presenter directly, and I don't know if he will be able to share his slides. That's an individual decision, but yeah, we are not giving out copies of slides. But if you need to reach David, he's put his contact information in. Thank you, David. We really appreciate this.
Thanks for having me, Lisa.
All right. And next month for everyone, we have one on estate and wills in probate. So make sure to sign up for February 3rd. And have a great day, everyone. Thank you.